Okay. Thought we turned it on. There we go. Welcome, everyone. My name is Jeff Fowler. I'm with the Apartment Owners Association, and it is really great to have you with us today. Yesterday, we had Tuesday. The Tuesday, we used the pun, and we called city council, we called county supervisors all over the state. And I've had some pretty good feedback so far from members who said that, yeah, when they called, that the people answering the phone had commented that they had received lots of calls. So for all of you that got involved with that, congratulations. And we'll see what kind of traction we can get all throughout the state with those counties and cities that are continuing to keep the emergency orders in place and putting tenant protections in place, or keeping it there for far too long. It's day 720. We have not forgotten, and so we're continuing to think about that and do what we can and try different things. And so we've even tried to change up our messaging and talk more about how it's impacting tenants in a bad way. And so we know that they don't care about us too much, so we'll try to hit it from another way. And all we can do is try new things, and then keep trying. And never give in, never give up, and keep going for it. So that's what we'll do. And you can help us repeal the death tax. And if you come into the office, any of the AOA offices, you can sign a petition if you haven't already. And with Howard Jarvis Taxpayers Foundation, they have an initiative that will make the ballot. And so we need all those signatures. And anyway, AOA, it's here. We want to keep you in the know and give you the information that you need. And earlier today, we had Robert Hall and Associates sharing on taxes and gave us some good information. Next week, we have one on the liability associated with mold that you'll want to know about, and then also how you can remediate that, and also just a whole lot more. So you'll want to catch that one as well. And if you are not getting our emails, you need to check your spam. And if you are still not getting our emails, you can sign up for it. Or if you're an AOA member, definitely update your email address with us so that you get all of our emails, and you hear about things like the Tuesday thing where everybody participated and called in. And we don't want you to miss it, and we do need everybody's participation. The more that participate, the better. Why are the tenants groups so effective? Because they have people that are active, and so we need all of us to also be active and to have our voice heard. And I know many of you are, and I want to acknowledge that and say thank you so much. All right, closed caption can be caught on Facebook, so definitely go to Facebook if you'd like the closed caption. And let's see, this event is sponsored by H&S Wealth, and they are your 1031 exchange experts. They're local to Southern California, specifically the LA area, and they've been with the AOA. They've been advertising for 20 years now, and just have so many good things to say about them. Our speaker today, he's an LA boy, grew up here, but more importantly, he has about 20 years under his belt in real estate and in securities, this whole area. And so he's going to be able to bring you a message today that's amazing. He's a partner with Bob Horning at H&S Wealth. It's my pleasure to introduce to you today Adam Bryan.
Thank you, Jeff, so much. Appreciate it as always. And as you heard Jeff say, my name is Adam Bryan with H&S Wealth Management. We are financial advisors, investment advisors. Those of you that watch these live streams regularly have probably seen me talk about 1031 exchanges or tax law or Delaware statutory trusts. But I thought we'd mix it up a little, and I'd talk about some different stuff. You know, not tax regulation stuff, not tax legislation in Congress stuff, or cash flow stuff or appreciation stuff. I thought we'd talk about stuff. And when I say stuff, I mean stuff. The furniture that you never figured out what to do with when you bought the new couch or the freezer you used to have in the garage, which is now the two-car garage that doesn't fit a bicycle. And what I'm referring to is all the stuff that, frankly, we as Americans collect over time. And eventually, we're not able to keep it in our homes or in our condominiums or apartments. What do we need to do with all this stuff? Well, we rent self-storage. And that is the topic for today's talk today, investing in self-storage. There's a lot about it that I think a lot of folks aren't always familiar with, and we have a variety of methods that you can invest your funds into a self-storage investment and get a lot of the same benefits you would from your other investments. So the first thing you'll see, you can put the screen up, guys, yeah. First thing you'll notice is that the demand has been growing. Frankly, we have an aging population. People are buying more and more things. And the demand has grown considerably in the last 20 years. To this point now, about 10% of households have a self-storage unit that they rent, which is kind of an amazing number. But if you think about it, off the highways, maybe off the freeway, even here in Los Angeles and certainly around the country, you've seen more self-storage facilities crop up over the last 10, 20 years, and that's because of this demand. Now, it isn't just that we have too much stuff that we bought, like I talked about. There are some other drivers that may not have occurred to you that make self-storage so prevalent. Job relocation. We are a far more mobile society now. People are moving around more. And when you relocate, that often requires somewhere that you need to put too much stuff that doesn't fit in the new location. Or downsizing, empty nesters, divorce, unfortunately, inheritance. All of these factors, as the economy grows and as the population grows, is driving this need. Also, we have about 1 million active and inactive military members, and when active members are deployed overseas, often for 2 years, they need to put their stuff somewhere. Kids moving out of state to college. All of these things drive the demand for self-storage. Not so much the economy, interestingly, and that's one thing I like about self-storage. In other words, in a weak economy, often we see challenges in all kinds of investments. But interestingly, during the Great Recession, 2009 and 10, the only asset class, investment real estate asset class, that increased its average revenue was self-storage. And as we think about it, unfortunately, so many people were dislocated. They needed to find another place to live or move back in with mom, and they had a whole house full of furniture. Self-storage is relatively affordable, can be $100 a month or even less. And actually, there was a demand drive for self-storage units in the recession. Now, the converse is not true. When the economy's good, guess what we buy? And everybody's saying more stuff. In fact, that's true. And as a result, again, there's demand. So in good times and bad times, self-storage seems to be holding up quite well. Another thing when I talk to folks about self-storage that never usually occurs to them is how prevalent it is with the small business community. People who sell tchotchkes online and need to have that storage space but can't afford a warehouse, or they don't need that much space. Small businesses, tools. Your landscaper maybe can't put all of the stuff that he uses or she uses in their garage at home, so they rent a self-storage unit. About 19%, it's estimated, of self-storage units are rented by small business or small business affiliates or independent contractors for business purposes. As you can probably guess, self-storage maintenance upkeep is relatively easy, certainly compared to dealing with tenants in an apartment building or maybe a big shopping center. It's relatively simple. You're renting out a space. Maybe you have HVAC control, climate-controlled environment. You have security fence and cameras, and hopefully you've got a contract with a security agency that sends someone out if there's a problem. Very relatively easy. In fact, many of the top self-storage operators are not even having people on site physically 24/7. That used to be the standard. Now it's automated. You can actually rent a unit, pay your bill, obviously, expand your unit or close your unit and move out without having an employee on site. It can all be done through a call center and remotely like an ATM. All of this is important because that means we're able to lower the costs of owning and managing a self-storage facility, and the lower your costs are, the greater return that you'll get both in cash flow yield and then ultimately in appreciation when you sell the property. So it's an excellent asset class. Let's talk about some of the advantages of self-storage. The first one is, interestingly, it's to me very much like apartments. Now, those of you that own 2 units or 10 units even, probably your ideal is to be 100% leased. And that makes sense if you're keeping your rents at market levels. I happen to know from dealing with the AOA members for 20 years, most folks actually usually aren't at market rates. They've had a good tenant. They don't raise the rent very often. They pay on time. They aren't too much of a headache. And there's nothing wrong with that. But when you're investing in institutional grade real estate of apartment buildings, I'm talking $50, $100 million buildings with 400 units, you actually don't ever want to be 100% leased. That's actually a negative. That means you're not charging enough and you're not bumping your rents up because you're full. You can only do it after the initial term of the lease. So 95% roughly is the ideal. And the reason I mention that is the same applies in self-storage. And why would we want to always have this 5% turn, as we call it, or roll? The reason is you're able, again, to keep up with market rates. If you always have people coming and going, that means you're always increasing your revenue. And that's the goal when you're effectively managing institutional real estate, investment real estate. Like apartments, it's multi-tenant. You're not relying on one tenant, one warehouse tenant, or one shopping center or restaurant. It's multi-tenant. You have hundreds of units. So, of course, on any one day, you're not going to lose half your tenants. It just doesn't work that way when you have multi-tenant. Another really strong advantage of multi-tenant self-storage. Default. So we've all had the experience, unfortunately, of a tenant not paying rent, and we've got some very tough strictures here in LA, as you know, to get that tenant out eventually and potentially have to evict them. Self-storage, we don't really have that problem. And the reason is, generally the contracts vary, but about 2 months of delinquency and you're out. And by that I mean they put a padlock on your unit so you're not going to get your stuff, and you're going to be notified and have an opportunity to get yourself even. But if you don't, and this happens many times, they auction off the whatever you have in your unit. You've all seen on Storage Wars on television. That's a real thing. And it creates a situation where there's not nearly as much what we call loss to lease or delinquency, non-payment of rent, because it does happen, but you just get them out very quickly, and guess what? You replace them with a new tenant who's going to pay market rates that probably are going to be higher. If you're concerned about inflation, right now we're hearing about it constantly. What you may not know is that about half the inflation we're experiencing is coming really from about 2 sources. One of them is automobiles, both used and new. And guess what the second one is? Rents. So inflation, when the markets go up, when interest rates go up, we also see an increase in wages generally, and we also see an increase in rents. We're experiencing that big time right now. Once again, speaks well for multifamily and multi-unit self-storage. Another reason that's at H&S, our primary asset class that we focus on investing in. What other advantages do we have? You know, where there's growth in an economy, which we're mostly seeing in the Southeast nowadays, that's where we tend to see growth in the self-storage. So there's more demand when there's more homes, generally middle class and upper homes, people that have stuff and can afford to place it, usually on a credit card, by the way. I meant to mention that with delinquency, the payment's done monthly, and you know, the tenant doesn't even have to worry about it. Their rent gets paid by their credit card, and eventually there's hopefully net cash flow for the investor. As the internet's grown, as small business, we all hear about the gig economy, as we see people moving to generally warmer parts of the country. All of this is driving the demand for self-storage, and there's only a limited supply. We're seeing more and more getting built. There was a huge slowdown in 2020, really for everything, as you might recall, and certainly for construction of multifamily and self-storage. Even into 2021, we're just now starting to see it try to get caught up. It takes a couple of years to get these projects off the ground and operating. So there really is a dearth of product or a lack of supply that's needed to meet the demand, all of which speaks really well for self-storage investing. Default rate. You know, when you look at, and there was a study that was done for investment real estate, who ends up losing their property to the bank most often and least often, not surprisingly, was self-storage. In the end, people are almost always generally able to make the debt service, to pay the loan every month. And again, hopefully there's some additional cash flow to investors or to the landlord, the owner. Now the secret used to be the big secret. I was saying this about 8 years ago. Now it's a little less of a secret, but the secret sauce in self-storage is something, again, that most folks may not realize. And that is the ownership of self-storage facilities. So many of us have seen the kind of funny puns on the names of them, you know, as opposed to public storage and you store it and strategic storage and Cube Smart, all the big names. Well, they only account for about 19% ownership of all the self-storage in America, these big institutions. And these are the folks that I'm talking about who effectively manage the properties, who automate, who make sure their market rates are being kept current on a daily basis, literally tracking the market. Those are the folks that are operating the properties that we work with. But the other 81% are owned by effectively mom and pops, somebody who owns maybe just one, puts a cute name on it, your self-storage, something like that. When you see those non-brand names, you'll see more of them than you actually will the brand names, the public storages of the world. And why is this important? Because when you acquire an investment property, you look at the rents that are in place, and you apply what's called a cap rate that determines the value. It's a multiple of the revenue it generates, and that multiple can be higher or lower depending on a more expensive or a less expensive market. But however you slice it, if that owner, that mom and pop, is not maximizing their their revenue, you're able to get a pretty good purchase price because the revenue's only so high. What happens is these big institutions are able to come in, perhaps fix the facility up, modernize it, automate it, increase the revenue, start bumping those rents, and eventually really create a great opportunity. We use the term value add. And there's a lot of value add opportunity in the self-storage space because there are so many smaller operators or independents that own units that are being bought up by these big funds and institutions and REITs and so forth. So that's really a big advantage. It was less known, like I said, about 8 years ago, and now it's become a lot of the institutions are looking, it's growing, and you will start seeing more branded self-storage, even here in Los Angeles as well as all across the country. Now, how can I invest in self-storage, Adam? Good question. First of all, of course, you can own your own. I wouldn't recommend trying to operate one if you have no experience. You would want to hire an operator, and some of these brand names that I mentioned will manage the property for you. There's brokers who specialize in it. Very hard to find in areas like Southern California where, frankly, the dirt is expensive, the land is valuable. Makes it very hard to find a good deal. But you will find deals across the country, and there are brokers that specialize it. That's real estate brokers as opposed to investment brokers like Bob and I at H&S. In our world, there are investment funds, interval funds they're called, or DSTs, Delaware Statutory Trusts, or REITs, REITs. All of these are investment vehicles. But without going into great detail on all of these various methods of investing, there's really two areas to consider. One is public traded funds, and the other is essentially public non-traded funds. And what I mean by public is that they report perhaps to SEC or their local state securities authority. There's a lot of due diligence and regulation around them. But they're private, they're non-traded. So if it's a traded fund or REIT or stock in a company, as you know, it's the value of the stock is the bid and the ask, right? It's what is a buyer willing to pay and what is a seller willing to sell for. That has nothing to do with the revenue or the underlying value of the assets. It's strictly how a market economy works when it comes to investment. And that's why companies like, let's say, Tesla can be wildly, have a huge market cap, wildly valuable. They don't make any money, which, if you think about it, does that make sense? Well, it does in a traded market. The reason I mention this is we like to specialize in non-traded. The reason being, If it's in a traded market, number one, the underlying value of the assets may not reflect the price you're paying. Again, it's just a market rate. And number two, the liquidity issue. The one advantage I will tell you in any traded stock that you can find on Ameritrade or what have you, Public Storage is the largest REIT in the country, is that it's liquid. Every day you can go and make that sale, that bid and that ask, and get out, if you will, get your capital out of the investment. That's the nature of a traded stock. In a non-traded, whether it's a fund or a private REIT, not all REITs are traded in public, or an interval, all of these different vehicles that I'm talking about, they tend to have maybe a quarterly redemption, an opportunity to sell back your shares at the calculated true value divided by the number of outstanding shares. That's called the NAV, or net asset value. So you trade off that liquidity for arguably a more realistic price. Now, if everything is doing great, the value will increase. That doesn't mean the publicly traded stock will go up. In fact, the opposite can frequently happen. Doesn't happen so much on these private funds. And that's really what we focus on and deal with at H&S. So that's the kind of thing we would talk to you about. Last thing, to make that decision, you have to look at your individual circumstances. And the fund period of time that they operate, they can be in perpetuity, forever. Meaning they trade on a market and they just continue to buy and sell shares that people own. Some of them are smaller, shorter term private funds that are non-traded. Some of them have a period of 50 years that they expect to operate. It all depends on what you're looking for as far as you want immediate cash flow perhaps, or maybe you'd like to see some appreciation in your portfolio, but you don't need as much cash flow. There are longer and shorter term funds that offer a lot of flexibility, and the only way for me to tell you which one makes the most sense is, of course, to talk to you and understand what you're trying to accomplish. We all, of course, want to make money in our investments, but we have different horizons. Some of us are still working and aren't retired yet. Those are the kinds of things we would help you with and navigate, and then show you what's available through the independent broker-dealer network, the non-traded stuff. Cash flow, everybody often asks, what are the dividends or the distributions? Generally it varies. For the non-traded, maybe a little bit lower, around 4 or 5%. Traded funds have a dividend usually even less, but they have that volatility of the market going up and down. Sometimes they go up dramatically. So again, advantages and disadvantages, we help you figure out what makes sense for you. Best way is to have a conversation, to schedule a consultation with us, of course, no cost or obligation, and we'll help you get to that. I can't not mention exchanges just briefly, and that is to say, what if you are doing a 1031 and you want to invest in self-storage? Can you do it? Absolutely you can. You would do it through a Delaware statutory trust or a DST, which is an entity that's formed. Interests are sold off through advisors like myself, and it qualifies as real estate. For 1031 purposes. Often there's even a portfolio. Sometimes they're individual properties or little groups of properties in these self-storage DSTs, but they are frequently available, and you get all the same tax benefits of ownership of real estate. If you put up 1% of the money, let's say, in a $100 million fund, DST, you would get 1% of the distributable cash flow, the appreciation, the tax benefits, the depreciation, things that you write off, expenses on your Schedule E. It's designed that way. And here again, we see perhaps a little lower cash flows, maybe in the mid to high 3s, low 4s, cash on cash. DSTs distribute monthly, your distributions, your cash flow. Most REITs are quarterly, although there are some that are monthly in funds. Of course, the sponsor company takes care of the management. They hire the operator, work with the operators to make sure they're managing the property effectively, and probably in 6 or 8 years, they'll sell the property, and the good thing is you can exchange out of it. You get 1031, so if it has appreciated in value, you get this huge benefit that you can exchange out and continue doing exchanges, or you can exchange in. You don't have to be doing a 1031. You can have a direct investment. It's in one of these DSTs. Perhaps that makes more sense for you than one of those other REITs or funds. Gentlemen, if you put up the slide there, this is our team. Again, you've probably seen myself and Bob and maybe Naomi and Riley at trade shows. Someday we'll get back to doing trade shows. If you have a question, there's a chat box, I believe, whether on YouTube or Facebook. If you'd like to learn more, if you'd like to see some examples of specific funds like I'm discussing or DSTs in self-storage, just call me or email me. My information's right there. And I want to thank Jeff and the team, everybody here at AOA. We've had a wonderful relationship, and we're going to continue moving forward. And let me know if I can help you. And with that, let me hand it back off to Jeff.
All right. Thank you so much, Adam. And we are going to take questions now, and it can be about the self-storage. He has done a lot of research and understands that market pretty well as the DST market, where he spends most of his time. And so those are questions you can definitely write those in right now. And then also, if you joined us late, I noticed that a lot of people did join late. At 10 o'clock, we did have a live stream about taxes, and so you'll want to catch that. Then next week, we do have one about mold and just avoiding the how to avoid lawsuits and how to take care of the mold remediation, and then just beyond that, a lot of other things. So you'll hear from a mold expert. So you'll want to tune in next week for that. And anyway, also to say that yesterday was Tuesday, and it was kind of a pun. Not just was it a regular Tuesday, but it was also a Tuesday, because it was 2/22/2022, and so we had a lot of you did call in and called your county supervisor, your city council member, and I think we've had a good response. I've gotten a couple emails from different offices that we've called, and so that's a good thing, a good first little sign, but we'll kind of see how it all went. If you didn't participate, just give them a call today. Better late than never. And we have some talking points, and we're just constantly trying things to see if we can get some kind of response from our local government and try to put an end to the tenant protections, the eviction bans, because really those eviction bans are not what tenants need. What they need is rental assistance. That's something that they could put, that the government, if they want to control everything, then they're going to need to take responsibility financially, and they shouldn't be forcing you to do that. So anyway, and just ask here to show the phone number and the email for H&S Wealth. So if we could get that up, there we go. So Adam, and there's everybody. So there's his phone number, and if you are looking on a cell phone and maybe you can't see it, it's Adam at handwealth.com. And anyway, if you're interested in in DST specifically, we're also including a link at the bottom of the YouTube page there, where you can link to one of the DST talks that he has done in the past, and learn more specifically about what they offer. And they are local to Southern California, specifically the Los Angeles area. All right, so let's see. I have no questions right now, but if you have a question, definitely now is a good time to put that in. And Adam, what was your as you looked at the self-storage, what was the thing that kind of stuck out to you more than anything?
Well, it's a great question. As I really started to kind of make a study and get involved in placing investors in these types of things about 8 years ago, what struck me again was that sort of opportunity that was out there and kind of hidden. It's fairly common knowledge now among industry participants and investment companies and REITs and hedge funds. But that whole concept of there's all these self-storage facilities out there that are frankly not being run very well. And while that might sound like a bad thing, if you're one of these institutional funds, it's a great thing, because you're able to purchase it at a value that you know should be higher if it were better operated. So you get to pay less, you implement those improvements, and results in a much better return. I am also seeing, even just in this last, less than a decade, more development, more self-storage, new facilities going up, as well as resolving issues on old ones that are purchased from independents. It's opportunity, It's often true with apartments or rental homes as well, but not as dramatically as the self-storage. A lot of self-storage operators that are independents do a very poor job. They don't really even know what they should be charging. They're not raising the rents anyway. Hopefully they have their tenants on credit card, but often they don't. Those are the kinds of efficiencies that are going to create value for someone that's coming in and buying a new property or certainly developing it from scratch.
Now, you mentioned a local REIT that was related to self-storage.
Yeah. Company called Strategic Storage, which is located down in Orange County in Ladera Heights, is a good example. They're one of the major institutional ones that's out there that's also doing development in the U.S. and Canada. There is something there that they'll have a variety of non-traded and traded REITs to talk about, and that's one of the ones that I would bring up most likely if we're to chat.
Great. And here we have a question. Just wanted a little clarification. Please explain the public versus non-public funds again.
Yeah, that's a confusing one, I know. When we say public, we tend to think that means traded. So when a company is public, that means that the SEC regulates them, that quarterly reports have to be filed. There's a lot of regulation around them. Doesn't make them bulletproof, doesn't guarantee anything, but it does mean that a lot of eyeballs are on them versus a small private partnership that the government has no visibility of whatsoever. Also, investments into these funds have to be sold through licensed individuals like myself and Bob at H&S. That's a public fund, but that doesn't mean you're on an open exchange or traded. The word really that's important, along with public and non-public or private, is traded or non-traded. And if it's a traded fund, it's a stock, which is essentially you own a piece of a company that in turn owns real estate. And if it's a REIT, R-E-I-T, Real Estate Investment Trust, if they pass through 90% of all of the cash flow, tax benefits, etc., to the owners of that stock, it's effectively, it's like a DST, but it's 90%, not 100%, but it gets to qualify as a REIT with IRS and SEC. And what that means is they're not taxed at a corporate level, and then you're taxed for your distributions, for your dividends at an investor level, and there's no double taxation in a REIT. They get operating fees to manage the property, and they pass everything through, at least 90%. That's the nature of a traded REIT. The problem, I shouldn't say problem, but the unique thing about it is that it's, again, traded on a daily exchange. What is the value of one share of a public storage REIT stock? The answer is, what are you willing to pay and what is the seller willing to buy? It has nothing to do with the underlying value of the real estate. Many people will trade online or invest in funds online of traded funds that are out there. Private and non-traded, public and non-traded, those you're not able to invest in without going through a financial advisor, an investment advisor like H&S Wealth. And that's really where we specialize, those funds that are not out there for the general public, but people that have been vetted and advisors who've been vetted that are offering them. So think of it in terms of liquidity. Traded means it's on a daily exchange. Maybe it's worth the price you're paying, maybe not, it just depends. But you can trade it every day, right? You're able to exit or have a liquid investment, get your money out on a day's notice, literally. In some of these funds that are private or non-traded or public and non-traded, those don't have a daily rate to determine the value, a bid and an ask. Those actually do a calculation to figure out the value of the outstanding shares. And then many of the funds, this varies, will have a quarterly opportunity to redeem the shares, which is to say, sell back the shares at the current value to the REIT. And there's different circumstances for different funds. But you're trading off that daily liquidity for arguably a more accurate valuation of the shares.
Great. Yeah, it's just interesting, even as we make investments in the stock market as well. And like there's a company, Plantier Technologies, PLTR, and they had like 30% growth, this amazing quarterly report, and there's a tremendous value there, and they're probably going to have like 10 years of similar growth, and yet their stock went down like 15% even just recently. So it's kind of funny when you're dealing with the value is really isn't appreciated always in the stock market where it would be in what you're talking about. So that was just even one that I've invested in. That's a little bit of it's bombing out right now, but eventually it'll come back because the value is there. But yeah.
Buying opportunity.
What's that?
Buying opportunity.
Yeah, exactly. That's a good time to buy that one. Well, no advice over here, but
Yeah.
but that one I'm holding. I'm not selling it at a loss. That's for sure.
There you go.
All right. So great question on there. Okay, on B-Chan. What is the cost to buy a self-storage facility, and what would the appreciation over the years be? The appreciation over the years.
Yeah, I understand your question, but that's a real tough one to answer in the sense that it's kind of like saying, what will my house in Granada Hills appreciate over the next 10 years? And the answer is, of course, we don't know. I have seen historically double-digit appreciation of some self-storage facilities in these funds, or some shares of these funds and REITs in recent years. Double-digit meaning more than 10% per year. But that's, of course, not a guarantee, certainly, and does not always happen. I think the first part of your question is, what do they cost? And again, it varies depending on the market, just like any other real estate. What are the prevailing cap rates in a given market? What are people paying for per square foot, let's say, for houses in Florida, in Central Florida, say, versus Los Angeles? Obviously, there's a big difference. In investment property, it's going to be based on the revenue that it produces and a multiple thereof. The higher that multiple in a market that's perhaps not as advanced as LA, the lower the price, and the converse is true. So bottom line, it's really not a question I can answer. It just depends.
And as real estate, is it going to be pretty similar? The cost of the land is going to appreciate the same as anywhere else, it would seem like. Is it going to be? It's going to be pretty, maybe same ballpark as what a rental property would increase at, or is it? I don't know if you have any more specific information on that.
It certainly could. I mean, you make a very good point about land value versus the improvement value, which is how you break out the value of a piece of real estate. And land value in Los Angeles, as we all know, is at a premium. Why is that? Because it's what's called infill. You essentially can't build virtually anything without knocking something down. Infill. The only other option you have is to go to outlying areas, Palmdale, Lancaster, this Inland Empire. Same is true in other markets. But generally, when you're in a market where there's a lot of land, then prices tend to be lower, obviously, and there may be more opportunity as that market grows. So it really just varies, again, very much like any other type of investment, real estate or even residential.
Great. And Brenna on YouTube, I saw your website that you offer green energy investments and would love to hear more.
Yeah, hi, Brenna. That's a conversation for another live stream, perhaps, and just reach out and we can talk about, essentially those are oil and gas type programs, again, private, non-traded funds, not obviously related at all to self-storage. So we'll hold back on discussing that one, but there are funds out there.
Okay, great. And it looks like Bruce, we're getting a question from Bruce here, but we're... there we go. Okay, here it is. Okay, from Bruce, can I do a 1031 exchange from apartments to a REIT?
Great question, Bruce. The answer is yes and no. Essentially, no. When you do a 1031 exchange, the IRS wants you to trade investment real estate for investment real estate, or real estate held for investment purposes or operation of a business. So that would preclude any stock or REIT or fund. There's one exception, the reason I say yes, and that is if a REIT actually buys your property and then gives you shares of their REIT rather than cash, that's not a 1031, that's a 721 exchange. You do not pay capital gains like in a 1031. The catch is that when you sell the shares in that REIT that they gave you, you immediately have it triggered the capital gain that you'd had over the years build up when you did the exchange. And generally, REITs are buying very large apartment buildings. There are some that specialize in single-family homes, for example, but generally they're buying very large, properties from other institutions. So 721s don't come up a whole lot in that world. But the key is that they don't want you to trade into a fund or a trust or anything other than either deeded real estate or a Delaware statutory trust. That was defined in the code in 2004. It qualifies just like any other real estate. And as I mentioned before, it's similar to an investment fund or a REIT, but it's also very much just like owning a fractional share of real estate in a DST. And absolutely, you can exchange into a DST interest. We specialize in multifamily self-storage, but there's all kinds of real estate out there that are put into DSTs that you can sell your apartment building and exchange into.
Now, I noticed just some of the headlines that right now I think it was 20% increase in the prices of rents across the nation in this last year, which is just ridiculous. How has that impacted the performance for some of the 1031 exchange properties that you've seen? Have you also seen a similar? Has that kind of tracked along with that increase?
It has to a degree on the multifamily. There was a slowdown, of course, during 2020 where pretty much everything froze and we didn't see a lot of people renting new units, whether it was apartments or self-storage. We haven't seen necessarily 20% in all markets for this institutional type of real estate, but we have seen significant revenue increases, absolutely. It is reflected ultimately in the value of the property, as I talked about before, the operating income and the net income applied to a cap rate. And we've seen some full cycle sales happen in the last year that had phenomenal results and returns. Of course, now I would argue we're sort of at the top of the market, as I mentioned earlier, and as you read, we've seen a huge increase in rental rates. It's great to be a landlord at this point. It makes it tough when you're a buyer, though. It makes the real estate more expensive, which makes it harder to appreciate more and cash flow stronger. But yeah, we definitely see that reflection in the institutional space as well.
Right, and in the Obama administration, there was a key economist that said the best that we'll see over the next 10 years is 10% inflation every year for the next 10 years based on the amount of money that we've printed and just everything that's gone on through Trump, through Biden, the amount that's been printed. Any thoughts on that?
Wow, that's a big one. We're talking about inflation, and I do remember talk like that. I remember telling investors to expect some pretty big inflation around 2010 and 11 because of exactly what the person that asked the question pointed to, essentially the buying of bonds or printing of money, as we call it. But guess what? It didn't happen for well over 10 years. And what we're seeing now isn't necessarily systemic as it is as a result of the pandemic and obviously the big interruption that we've seen in oil and as well as supply demand and in all those issues, the logistical issues, getting products to market, also a shortage of chips. The larger answer to your question is I don't think anybody knows what inflation will do. I will say that the concern about the huge blossoming of the national debt, huge, unbelievable, is terrible, is not a good thing. But as a reflection of a percentage of the general gross domestic product, it actually is not as crazy as it may seem. I don't even remember the number now, 30 or 40 trillion, I believe, for the national debt, not the annual deficit. So it's not good. But that being said, I kind of think of it, my personal, since you asked, belief and experience tells me it's a little bit like a mortgage, particularly for a first-time home buyer who puts 3 or maybe 20% down. Pretty substantial part of their home is actually really owned by the bank, as we all know. But you either stay in that home for enough time for it to appreciate, or if you're like my grandparents, you stay there forever and burn the mortgage after 30 years, the loan document. My point is that it's that kicking down the can, as they say. It isn't a healthy thing for an economy, but it isn't necessarily disastrous. Why? Because you just simply constantly carry this debt. The key is that you make debt service meaning payments, in this case bond payments. As long as you're able to continue to do that, you can keep functioning for many, many years. It can hurt an economy and it can help an economy, and as we've seen since 2009 in the big financial bailout, it actually hasn't been problematic. In 2018, there was a huge deficit increase as a result of the Tax and Jobs Act under the Trump administration. And again, everything was fine up until COVID. So I don't know what's going to happen. I know a lot of economists that are far smarter than me are very concerned about this tremendous amount of debt. But as long as it's not dramatically higher as a percentage to our gross domestic product, our GDP, and as long as we're making debt service payments, personally, I don't think it's going to be as big a deal as a lot of folks think it will. And if I'm wrong, it's only going to benefit the type of investment offerings that I like to focus my clients on, again, multifamily and self-storage.
Right, and I agree with that. I think that that's the key thing is that being invested in real estate is a great place to be if we have runaway inflation. And do you ever sell self-storage properties? Is the next question.
In funds, there's a buying and selling of the various owned properties, oftentimes frequently. The question is the whole fund going to sell or merge with another REIT? But yes, the properties individually are held, maximize that revenue. When the cap rates dictate that it's a good time to sell, then sell the asset. If it's a DST, look for a 6 to 8 year hold period, because usually that's either a single asset, a single property, or a small portfolio. In a REIT, it can be an ongoing, as I said, some REITs are in perpetuity. That means forever. They just are out there. They're being bought and sold, depending how big the fund is on a daily basis. And obviously they're selling hopefully at nicely appreciated prices, and that is what we've been seeing in recent years.
Great. All right. Well, I think that's all the questions that we have. And, we can, so you'll have to look around for a broker probably that does that. And it is a specialized thing. And also you want to consider where you want to buy before you try to go find somebody. Figure out your location that you're thinking of, and then maybe go for it. But definitely the DST being a great option because all the hard work is done for you. And all the hard work that you've done, you get to transfer it into something that's more passive. And so that's kind of the whole idea with it. But anyway, thank you guys so much for joining us today. And definitely take a look at the more part. And you can, if you want to learn more about the DSTs. And hope you have a great week. And remember, next week we'll be talking about mold. And anyway, we're just trying to bring you things that'll give you opportunities to save money or avoid liability, and that's a big way to save money, or things that could be opportunities that you could capitalize on. And anyway, have a great week, and we'll see you next week.